Now let's talk about China. Beijing is finally taking steps to fix its economy. Today it made a series of big announcements, all aimed at one goal, getting growth back on track. Economists say China has unleashed a quote-unquote stimulus blitz. The country's central bank is leading the charge here. It is pumping more money into the economy. Loans are being made cheaper. One big area of focus is mortgage, the EMIs that homeowners pay on their home loans. Interest rates on these loans are being slashed.
The minimum down payment for mortgages for first and second homes will be unified, making the down payment for second home loans at the national level even lower than the current 25%, downgraded to 15%.
So lower down payments and a cut in interest rates for existing loans. Basically, China wants to make home ownership more appealing, more affordable. These steps are aimed at the property sector. It used to be a major driver of growth for the country. It accounts for 20 to 25% of China's GDP, the property sector. But right now, it is like a jammed gun, one that refuses to fire. And Beijing is trying to fix that by cutting interest rates and making home loans cheaper. It is also trying to reboot the stock market. Two big announcements on that front were made today. First, Beijing is setting up a new fund. It will provide funding to brokers, funds and insurance companies. What for? To buy stocks and to make bets in the market. Around $71 billion will be set aside for this fund, $71 billion. There was one more announcement. China is incentivizing share buybacks. What does that mean? What's a share buyback? It is when a publicly listed company buys its own shares from the stock market. You're buying them back. Share buyback can be an effective tool. It can help in raising stock prices. It can boost market activity because when a company buys back its own shares, it reduces the number of shares in circulation in the market. There are fewer shares available for that company in the open market then. And this makes the stock more valuable. Beijing wants to encourage these buybacks, and for that, it will give out cheaper loans to companies so they can get these loans from commercial banks and use that money for share buybacks. Around $40 billion will be made available for this. Of course, investors have welcomed these announcements. Chinese markets saw a big jump. Mainland China stocks saw their biggest spike in 4 years today. So finally, there is some relief for investors. In fact, experts have been pushing Beijing for months. They've been raising demands for a stimulus package, but China kept ignoring these calls. Today, though, it seems to have finally given in. The question is this going to be enough? Or is this intervention too little, too late? You see, Chinese policymakers were forced to make these announcements today. They had no other choice, really. This year's growth target was slipping away. China's economy was slowing down at a much faster pace than expected, and the numbers were not looking good. Output from China's factories had slowed. Sales in retail stores were sluggish. Youth unemployment remained high. The latest numbers came out in the month of July this year. 17% of China's urban youth is without a job. 17%. Economists saw this data as well, and they arrived at one conclusion. They said China will grow at less than 5% this year, and that is below their growth target. They were aiming for 5% growth, but now experts say that there will be a lower growth rate, less than 5%, somewhere around 4%. That's their estimate. So now China is trying to reverse this decline, and that is why it announced the stimulus today. It may not be enough, though, because this economy faces external risks, too. Around the world, growth remains sluggish. The demand for Chinese products is falling. In April this year, China's exports shrank by over 7%. And to make matters worse, Western nations are putting trade barriers on Chinese products. From electric cars to steel, the West is looking to curb all kinds of Chinese imports. And this is also a problem for Beijing because exports make up almost 20% of China's GDP. It's a major growth driver again. It's what made China an economic powerhouse, the exports. If exports do not recover, this stimulus is not going to be enough. Yes, it may bring some relief in the short term, but in the long term, China will keep experiencing more economic pain.